The Indian Union Budget for 2025 to 26, presented by Finance Minister Nirmala Sitharaman, outlines India's economic roadmap. It addresses inflation, fiscal prudence, and introduces changes to the income tax regime. The budget emphasizes infrastructure, digital economy, and sustainable development. It aims for inclusive growth, making India a global economic powerhouse. One of the most significant announcements in the Union Budget 2025 to 2026 is the increase in the basic income tax exemption limit to 12 lakhs rupees. This means that individuals earning up to 12 lakhs rupees per annum will not have to pay any income tax. This move is widely seen as a major relief for the Indian middle class, providing them with greater disposable income. This tax exemption is expected to boost consumption and savings, thereby stimulating economic growth. For a large section of the Indian population, this translates into more money in hand to meet their aspirations and improve their standard of living. The government's decision to enhance the tax exemption limit reflects its commitment to promoting social welfare and empowering the middle class, which forms the backbone of the Indian economy. In addition to raising the basic exemption limit, the budget has also introduced revised tax slabs for income exceeding 12 lakhs rupees per annum. The new tax structure aims to simplify the tax system and reduce the tax burden on individuals. The revised slabs are designed to ensure a progressive tax regime where higher earners contribute a larger share. Here's a detailed look at the revised tax slabs: 0 to 4 lakh 0%, 4 to 8 lakh 5%, 8 to 12 lakh 10%, 12 to 16 lakh 15%, 16 to 20 lakh 20%, 20 to 24 lakh 25%, and above 24 lakh 30%. These revised slabs, coupled with the increased basic exemption limit, are expected to provide relief to taxpayers across various income brackets. The simplification of the tax structure is also expected to make tax filing easier for individuals. Section 4. NRIs and the Budget 2025, a paradigm shift in taxation. The Union Budget 2025-26 introduces significant changes impacting non-resident Indians, or NRIs. These changes primarily revolve around stricter scrutiny of foreign income, an expanded definition of residency, and potential implications for tax treaty benefits. The government aims to ensure greater transparency and prevent tax evasion by individuals residing abroad, but maintaining substantial financial ties with India. The budget proposes enhanced monitoring of income earned by NRIs from sources outside India. This includes stricter reporting requirements for foreign investments, bank accounts, and overseas assets. The definition of resident for tax purposes is also under review, potentially impacting students and professionals living abroad who maintain strong financial connections with India. These changes are likely to impact NRIs' tax liabilities, particularly those who benefit from double tax avoidance agreements, or DTAAs. Stricter documentation requirements and enhanced scrutiny may necessitate greater diligence in tax planning and compliance. Section 5. Steering the economy. Growth projections and fiscal prudence. The Union Budget 2025-26 projects India's economic growth to be between 6.3% and 6.8% in the next fiscal year. This projection reflects the government's optimism about India's economic resilience amidst global headwinds. The budget outlines a roadmap for achieving this growth by focusing on infrastructure development, boosting manufacturing, and promoting investments. However, the government is also committed to maintaining fiscal prudence. The budget aims to achieve a fiscal deficit of 4.4% of GDP for the 2025-26 financial year. This target demonstrates the government's commitment to responsible fiscal management while pursuing growth-oriented policies. Balancing economic growth with fiscal discipline is crucial for India's long-term economic stability. The budget's approach to achieving this balance will be closely watched by investors and rating agencies. Section 6. Sectoral Spotlight, fueling growth across diverse industries. The Union Budget 2025-26 outlines initiatives to foster growth across various industries. Agriculture, enhancing productivity and farmer incomes with high-yielding crops and subsidized credit. Gig economy, formal registration and welfare inclusion for gig workers. Startups, a new fund to promote innovation and entrepreneurship. Manufacturing, boosting domestic manufacturing and export competitiveness. Tourism, increased funding for infrastructure and destination development. Energy, aiming for 100 gigawatts of nuclear energy by 2047. Education, increased funding for research and skill development. Healthcare, improving infrastructure and access to medicines. Section 7. Conclusion. A budget for growth, inclusivity, and a vibrant India. The Indian Union Budget 2025-26 is more than just a financial statement, it's a vision document for India's future. By focusing on growth, inclusivity, and sustainability, the budget aims to propel India towards becoming a global economic powerhouse. The budget's key highlights, including the increased tax exemption limit, revised tax slabs, and sector-specific initiatives, are expected to have a far-reaching impact on the lives of ordinary citizens and the overall economy. While the budget acknowledges the challenges posed by global economic uncertainties, it exudes confidence in India's inherent strengths and its ability to navigate these challenges successfully. The budget's focus on long-term growth drivers, such as infrastructure development, innovation, and human capital, is expected to lay a strong foundation for India's continued economic ascent. As India embarks on this journey towards becoming a $5 trillion economy and beyond, the Union Budget 2025-26 serves as a beacon, guiding the nation towards a brighter and more prosperous future.